Your parents bought their first house for $85,000 in 1992. That same house today? $413,000. Meanwhile, your salary might be only twice theirs. The math doesn't work. And here's the part nobody tells you. All the traditional financial advice you've been handed is based on a world that no longer exists. Skip the coffee. Save 10%. Make a budget. Noise. You cannot budget your way out of a structural crisis. If you're still playing by 1995 rules in 2026, you're going to lose hard. The median U.S. home price is around $400,000. In most markets where jobs exist, that's the entry point for a starter home. Not a mansion, just 3 bedrooms and maybe a garage. Here's the problem. Middle-income buyers can afford just 21% of homes for sale. Before the pandemic, it was 50%. Half the market used to be accessible. Now it's 1/5. Mortgage rates went from 3% in 2021 to above 7% by 2023. Even if they've dipped slightly, they're still above 6% in 2026. That $400,000 home? Over $1,000 more per month than just 4 years ago. What do people do? They stretch. Spend 45% of their paycheck on housing. Tell themselves it's temporary. Hope rates drop. They become prisoners. You're not building wealth when half your income disappears into a mortgage. You're surviving. One unexpected expense, a job loss, a car repair, a medical bill, and you're toast. Average new car payment in 2026? $700 per month. Trucks? $1,200. Do the math on a 7-year loan. You'll pay $130,000 for a vehicle that's worth $15,000 once it's yours. And everyone does it. Why? Because normal looks like freedom. In reality, it's financial slavery. Normal and smart are not the same thing. You can't afford both. The cost of normal. The Economic Policy Institute says, single Americans need $100,000 per year to live comfortably. Families with 3 kids, $280,000. These aren't luxury lifestyles. That's rent, groceries, childcare, health insurance, maybe one vacation that doesn't involve a tent in the car. Yet most households earn far less, and the system pushes you toward spending like you're rich while your cash evaporates. Everyone talks about the first $100,000 in savings, but that's a decade-long slog. The real milestone? $20,000 in liquid savings. Why? Because until you reach $20,000, every car repair, medical bill, or appliance failure is a crisis. You make decisions based on fear, not opportunity. After $20,000, everything changes. You can negotiate your salary without desperation. You can take calculated career risks. You can invest in yourself. It's the difference between surviving and growing. This is where most people fail. Paying off high-interest debt first is mandatory. 22% credit card debt? You're losing 14% if you invest at 8%. Stop the hemorrhage first. Only exception, your employer 401(k) match, 100% guaranteed return. Take it. Everything else? Attack the debt. No excuses. Here's the ugly truth. To win, you might have to look weird. Drive a paid-off 2018 Honda instead of financing a $50,000 pickup. Rent if buying means stretching your budget. Live so far below your means, people wonder if you're okay. That's not deprivation. That's buying freedom. While everyone else spends their future, you're stacking yours. The first $100,000 is the hardest part. It takes years. But once you reach it, next $100,000? 5 years. Third $100,000? 4 years. The boulder at the top of the hill flips. Gravity starts pulling money toward you instead of away. That first $20,000? Your psychological unlock. Your decisions stop being fear-based. Opportunities become visible. Risk tolerance grows. Not because you've changed, but because you can afford to risk. Median home price, $400,000. Median household income, $74,000 monthly mortgage for a comfortable house. $3,000 normal is financially impossible. Everyone stretching to keep up isn't irresponsible. They're playing by outdated rules. Normal in 2026 equals debt, stress, lifestyle inflation, and financial captivity. The only way out? Stop following the herd. Start playing your own game. Success in 2026 isn't a bigger house or a fancier car. It's walking away money. It's an option. It's the freedom to say no to a job, to a lifestyle, to a social expectation. Without fear, the system profits from your compliance. But your discipline is untouchable. Drive the paid-off Honda. Rent if it makes sense. Build that $20,000 buffer. Attack debt. Invest strategically. Look ridiculous for a decade if you must, because one day you'll look around and realize, while everyone else is drowning in interest payments, you're free.